Kitco Mining, special coverage of the National Bank of Canada Capital Markets CEO Mining Conference, is brought to you by Agnico Eagle.
A most dramatic transformation. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 NBC Capital Markets CEO Mining Conference. Joining me today is Tony Makuch, President and CEO of Discovery. Tony, welcome to Kitco.
Well, thanks for having us. Always appreciate the opportunity to get to talk to you, and the platform and what you bring. It's definitely a good way to get the message across, and I really appreciate the work you do for our industry.
Well, thank you. We've got a good message to talk about today, so we'll get into that. First, though, I want to clarify something. The company was formerly called Discovery Silver. You're changing the name and the branding to just Discovery.
No, we're still called Discovery Silver. We've been using the branding of Discovery at some point in time because we do have some gold operations. I guess maybe we're going through a period of adjustment, trying to figure out what in the long term what we could be called. But Discovery Silver works.
I prefer Discovery Silver. I've been following the company for a number of years, so that's very much etched into my mind. A strategic acquisition morphed you from an ugly silver duckling trapped in permitting hell to a golden swan. With cash flow, your shares are up sort of 500 to 600% over the last year after you bought the Porcupine mine from Newmont. That's in Ontario, Canada. Wow, what a night and day transformation, Tony. This was a big pivot for the company from being a silver developer to a gold producer. What was the opportunity you saw there?
Well, first off, let's just clarify. I don't think we were ugly silver duck in maybe we're like a Cinderella duck in Mexico, so just waiting to be let out of the tower.
I was thinking of a Hans Christian Andersen kind of analogy there.
Yeah, they're trying to get out of the tower. So I mean, Cordero is really a tier one world class project in Mexico, but definitely the acquisition of Porcupine, unlocks a lot of potential. Besides the fact that we see a lot of potential in Porcupine and what we can do in terms of transforming, and maybe people might be thinking of it as an ugly gold duckling and say, well, this is actually a special white swan and ready to take off in terms of Porcupine and what we can do to turn that into tier one asset, and it really supports a long term view and helps us support in terms of what we might want to be able to do with advancing Cordero as well.
Okay. Now, you personally and your team, you've got a lot of experience in Ontario. So what growth potential do you see at Porcupine? What are going to be some of the key catalysts there for people to watch out for? Well,
let's say in simple terms, what I see in industry, there's four drivers that really we can create value in terms of what we do. Number one value is how we operate our mines and the whole operating performance. We do have some, three very, very good operating mines, or two in operating form, the Hoyle Pond and Borden, that are operating. And then we have the new Pamour mine that we're advancing and bringing on to production. So how we operate those at high standards, that we do that, and how we work towards bringing the costs down in the industry is, I think that's one way we add value. Second place we add value is these projects have been underinvested in. So by investing in capital, buying new equipment, upgrading the infrastructure, whether it's ventilation systems, backfill systems, power systems, into these operations, help in terms of reducing costs and operate at a higher standard, but also in terms of helping grow production. Third part is the ability to build new mines. And, in Porcupine, we have the chance to build new production with Dome and, say, TVZ Zone. We have two projects that we could advance over the next 2 or 3 years that are organic, that'll build new production and bring and grow the production in the Porcupine camp while also reducing costs. And then the fourth leg of the stool, and the other exciting thing in Timmins is although it's a 100-year-old gold mining camp, we came out with saying we have over 15 million ounces in resources in Porcupine. The exploration upside is tremendous here, and we get a chance to find a lot of new value just with a diamond drill bit. So.
In terms of the exploration upside, do you see perhaps an opportunity to become a keystone player in the same way, in a similar way perhaps that Agnico Eagle Mines is in the Abitibi across the border in Quebec?
Well, we see that in terms of Porcupine and really the ability to be a major player in the camp. I mean, and that's what it does by having the large land position. Now, as we explore, we can look look at things across watersheds, across different geological settings, and and not have to worry about, well, we might find a deposit on somebody else's claim group or et cetera. And the other option we have is the mining infrastructure, the milling infrastructure, and the people already in place to execute. Right.
Okay. It was a transformational transaction. Let's talk about the impact on the balance sheet of that. Porcupine cost you what? $275 million US, of which $200 million was in cash, $75 million in equity. You raised the cash of $248 million in a bought deal in February, which means you're debt free. Although you have a $250 million revolving credit facility ready to go as and when and if you need that. And the deal also included $150 million of deferred cash payments and taking on some of the reclamation liabilities at Porcupine. How happy are you with the state of the balance sheet today?
Oh, well, I mean, currently our balance sheet at the end of the course is at over $340 million. Plus, as we say, we have a revolving credit facility, so we have liquidity up about $600 million. So the company's well financed. We've actually generated free cash flow from the operations in both our first and second quarter of operation, so Q2 and Q3 of this year. And we expect as we move forward, definitely we're in the right gold price environment that we're able to execute and invest the capital. Invest back into the operations, both in sustaining capital, growth capital, and exploration, and still maintain a strong balance sheet. But this is the one thing I try to tell our shareholders right now, and it become a story. This is not a story about a company that's going to create cash flow and then provide dividends and buybacks. Not for the next 5 years. We're going to invest in this business because we think there's a strong, a very very highly likely that we'll be able to double production plus in the Porcupine cap and create a whole lot of new value for our shareholders. Our share price has definitely, increased 5 or 7-fold since April when we announced the transaction. But, we look at there's still significant upside in our share price and our valuation in terms of what we're trying to do in Timmins, especially as we bring Dome on. The Dome project by itself could support the current value of the company. We have Cordero, which by itself could support the current valuation of the company. And then you have all this exploration and all the other things I talked about to improve. So there's a lot of run rate, a lot of highway in front of the share price for this company.
Now, with $600 million in liquidity, as you mentioned, Tony, I imagine one that enables you to do the investments, the sustaining investments, the studies that you need to do. Perhaps you can accelerate some work streams to be able to execute your plan faster than you perhaps contemplated at the start of the year. In terms of being able to double production over the next 5 years, how do you get to that position? What do you need to do to get there?
Well, I think if you look at, definitely we want to keep drilling within resource upgrade, quality resource, such as at the Dome. It's an 11 million ounce inferred resource, so we need to bring that forward. And to drill there, we're definitely drilling on the TVZ zone over at Hoyle Pond, try to really outline that. It's been drilled off in the past, but not quite the level of detail. We're going to do some engineering on these two assets. But the biggest thing is for us to advance the project. We're somewhat mill constrained. We've been working on the current mill, the Dome mill. We've increased productivity in the mill. It was permitted to about 4.5 million tons a year. Because of some investment or, the infrastructure needed to be fixed. Some tanks need to be repaired, on leach tanks and CIP tanks. We need to make some repairs in a few other areas. We're expanding a tailings facility. And one of the big things we want to do is change out the crushing facilities and modify the grinding facilities to support lower costs at current productivity rates, but be there to support the ability to double double productivity, maybe try to grow that milling capacity to over 9 million tons a year from 4.5 over the next 3 or 4 years.
And will we see those investments in 2026?
You'll see some of them in 26 and 2027. A big part of unlocking value in Porcupine right now, and that is having that processing infrastructure in place that really helps you to grow production.
Okay, excellent. Now let's. Porcupine has obviously put Cordero on the back burner for the time being. Which may be a good thing because previously you were forecasting that you would get your the permit for your open pit development there. The timeline you previously gave for that has passed. Obviously, a change of government perhaps complicated things there. But there's perhaps been some good news recently. Silver Tiger Metals got a permit for an open pit development. I imagine you take a lot of heart from that and see the potentially the permitting situation in Mexico will resolve itself positively for Cordero.
Yeah, we've had a lot of good conversations and dialogue with the regulators in Mexico. We've gone through in terms of our permitting process, all the legal review, all the technical review. We passed the test. There's no more clarifications needed. We're just really waiting for the last bit of the last approval of the MIA. We have applied for the change of land use permit. We've been directed by the government to apply for that. So and we own we've been able to purchase all the land and all the ranch land and work out all the agreements with any local rancher, the local ejido in the area. So we put all that behind us. So we're just really waiting for the permit. We getting always positive view from Mexico and the regulators and from our people down there that think that approval is imminent. But we're not sitting on our hands. We're continuing to advance on the technical side, waiting for that to happen. And we've been somewhat distracted by what we're doing in Porcupine. Maybe it's a little bit good that the permit was dragged on a bit, just waiting for that so we could really focus on Porcupine. But we're pretty excited about and bullish about, we feel very, very positive that we will get this mine will be permitted, and we see a very positive social impact and benefit to the local economy, such as what this brings to this region of Mexico is there's no reason why it won't be permitted. So.
Okay, as and when that permit comes, how will the timing of how quickly will you move ahead with that? Given that the investment plan that you've outlined that is necessary at Porcupine, how quickly would you seek to sort of start developing at Cordero?
So as I mentioned, we're moving over. We're doing some upgrading our feasibility study as we speak. We're doing some further detailed engineering in a few areas. We've looked at power, maybe come at a different approach for power. So we're checking on a few things there to upgrade our feasibility study. So we're doing that now and really trying to refine our capital cost estimates and our financial projections for that. We are working with syndicates, et cetera, and looking at alternatives for how we finance Cordero. And, we're getting we're positively moving that forward so that when we do get our permit, when we do get our change of land use permit as well, say coming into Q1 next year, we'll be hitting the ground running, and we intend to work to build this project.
With the high gold price and the high silver price, there seems to be more financial options available to finance projects. One of your competitors in Mexico has recently announced a big financing initiative. It's not stock, it's not debt. How do you see the potential to finance, and what sort of package would you put into place, if you could pick exactly what you wanted to do?
Yeah, that's a good question. Yeah, especially once we get our permit, we're going to have a lot of optionality. And one of the things we are looking at a combination of debt and some equity in order to help finance this asset. That's one thing we're looking at. We are looking at options with offtake and off-takers as part of a way to partly finance and combine that with other debt and other type of equity. There's a number of different alternatives that we are looking at. We definitely have the ability to do that. We are generating a lot of cash when we have financial strength in terms of what we're doing in Canada, but we're really working towards having those financial resources to support our growth plans in Canada and really to finance Cordero by itself.
Okay. Now, we're in a very interesting moment of time in the precious metal space. Gold at $4,000 per ounce, silver at $50 per ounce. There's been sort of 3 big CEO changes this year. There's been the creation of a number of new mid-tier companies, such as yourself, mid-tier producers, having bought assets from Newmont. There's another big transaction on the table at the moment with Kitco Mining looking at taking out New Gold. What's your view of where we are in the space at the moment?
Well, I mean, I think these are somewhat, good times in terms of, like you say, where metal prices are, and et cetera. But I mean, I've been around the industry long enough, and we're price takers, not price makers, and we've been through some cycles where everything is going really well, and then the prices can turn on you, and there's a lot of things happening in the market that have been driving gold and silver prices higher, but just as or maybe I put in perspective. As we build our operations for what we're trying to do, it's not just about building, growing our production. We are just as cognizant of the fact that we want to lower our cost to be in the lower half of the cost curve. We need to bring our costs down over the next while, and some of that is through cost savings in terms of what we do. But I'm not necessarily a believer in cost cutting. I believe in loss control. So it's about the money we spend in investing, and we put $1 to work. Do we get $1.50 for that dollar, or $2 for that dollar? And that's really what we're trying to do. So although in a nutshell, even though silver and gold prices are high, I think we still want to work towards how do we survive and prosper at $2,200 gold? How do we survive and prosper at $25 silver? And that's what we're working towards.
Okay. Now, you've got a lot going on. So as we look ahead to 2026, what are some of the key things we can expect to see from Discovery Silver next year?
Well, I mean, definitely we talked about Cordero and the advancement of Cordero. We think that could be a pretty exciting time, and that's going to have a lot to say for the company, and in terms of driving value and proposition for shareholders. But then if we go to Porcupine, I mean, a number of the initiatives what we're looking to advance, we definitely are working towards, solidifying our production that we had in the technical report that we filed. Look at it, try to have some improvements in that and support the work that's in there, lower operating costs. So that's one. Second part, though, is we're really advancing the Dome project. We see that as a real big catalyst for our share price, similar to what Cordero is, and we're looking at the alternatives for how do we we have the ability probably to make, there's 12 million ounce super pit there. We can probably come up with a smaller pit and stage it over a few years, and with lower capital, especially the fact that I tried to use the existing mill plant in the form that it is. So that's something that we're working towards. The current mill, we're working towards, reducing, trying to improve the reliability of that plant by removing the primary and the secondary and tertiary crushing plants, turn that into maybe put in a SAG mill with a new coarse ore stockpile, and just put a single gyratory crusher in place. That's something that we're going to work on next year in terms of that mill. That would then support the next phase of what we might do with that plant in terms of increasing productivity of the plant to somewhere between 8 and 10 million tons a year on that plant. So that these would be things we're working on next year. We're advancing TVZ. We're doing a lot of exploration, and we're working on to some other areas that might unlock milling capacity in the region as well for us.
Sounds like there's going to be a lot of news flow next year.
Yeah, well, we're not sitting on our hands. I mean, with the market's strong, definitely, but we're not sitting on our hands and just harvesting this. We're using this as opportunity to build and really set ourselves up for the future.
Excellent. Well, congratulations on a great transaction and a very successful 2025. Tony Makuch, thank you very much for joining us today.
Thank you.
And we have a lot more to come from the 2025 NBC Capital Markets CEO Mining Conference here in London, England. So stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining, special coverage of the National Bank of Canada Capital Markets CEO Mining Conference, is brought to you by Agnico Eagle.